Question 1. Title search and examination. What is the primary purpose of conducting a title search during the title examination process? A. To determine the market value of the property. B. To identify any existing liens, claims, or encumbrances on the property. C. To verify the current property owner's identity. D. To evaluate the physical condition of the property. Answer: B. To identify any existing liens, claims, or encumbrances on the property. Explanation: the primary purpose of a title search is to uncover any liens, claims, or encumbrances that may affect the property's title. This process involves reviewing public records such as deeds, mortgages, and other documents that can reveal issues such as unpaid taxes, prior claims, or disputes that could impact the ownership. This is crucial for ensuring that the title insurance policy issued will effectively protect the insured from potential title defects. Evaluating the property's market value or physical condition is outside the scope of a title search and more related to property appraisal and inspection. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 provides guidelines on the title examination and the duties of title examiners. Public record review, essential for identifying any claims or encumbrances. Question 2. Title commitments and policies. Which section of a title commitment typically lists any specific requirements or conditions that must be met before the issuance of the title insurance policy? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer: B. Schedule B. Explanation: Schedule B of a title commitment outlines any specific exceptions, requirements, or conditions that must be fulfilled before the title insurance policy can be issued. This section details items such as outstanding liens, easements, or other encumbrances that need to be addressed. Schedule A generally contains information about the insured property and parties involved, while other schedules are not standard in title commitments. Relevant rules. Oklahoma Administrative Code Title 365, Chapter 10 provides specifics on title commitment structures and required contents. Question 3. Scenario-based question. Emily is a title examiner who discovers an unreleased mortgage from a previous owner during her title search for a property transaction. What should be Emily's next step in handling this issue? A. Ignore the unreleased mortgage as it is not related to the current transaction. B. Inform the current property owner to pay off the mortgage immediately. C. Report the issue to the title insurance company and work with them to resolve the mortgage issue before proceeding. D. Proceed with the title insurance policy issuance as usual and handle the mortgage issue later. Answer: C. Report the issue to the title insurance company and work with them to resolve the mortgage issue before proceeding. Explanation: when a title examiner discovers an unreleased mortgage, it represents a potential defect in the title that could affect the transaction. The appropriate course of action is to report this issue to the title insurance company. The title company will need to address this unresolved mortgage, typically by working with the parties involved to ensure it is properly released or resolved before issuing the title insurance policy. Ignoring the issue or handling it later could result in complications or claims against the title insurance policy. The relevant rules. Oklahoma Statutes Title 16, Chapter 50 outlines the responsibilities of title examiners and procedures for addressing title defects. Title insurance industry standards emphasizes the need for resolving all title issues before policy issuance to protect all parties involved. Question 4. Title insurance fundamentals. Which of the following is a key difference between an owner's policy and a lender's policy in title insurance? A. An owner's policy covers only the lender's interests in the property. B. A lender's policy protects the property owner against title defects. C. An owner's policy provides coverage for the property owner's equity, while a lender's policy protects the lender's investment. D. An owner's policy is transferable to future owners, whereas a lender's policy is not. Answer: C. An owner's policy provides coverage for the property owner's equity, while a lender's policy protects the lender's investment. Explanation: an owner's policy protects the property owner's equity in the property, covering any defects or issues that were present before the policy was issued. It is typically issued for the full purchase price of the property. In contrast, a lender's policy protects the lender's investment by covering the amount of the mortgage loan and is effective only until the mortgage is paid off. The coverage of each policy is specific to the interests they protect. The owner's equity versus the lender's financial interest. Relevant rules. Title insurance policy coverage guidelines specifies the differences in coverage between owners and lenders' policies. Question 5. Legal aspects of title insurance. Under Oklahoma law, which of the following is considered an acceptable method for clearing a title defect due to a forged signature on a deed? A. Recording a new deed with the correct signatures. B. Obtaining a court order to quiet title. C. Issuing an amended title commitment. D. Simply updating the public record with a note of correction. Answer: B. Obtaining a court order to quiet title. Explanation: a forged signature on a deed creates a significant legal issue that must be resolved through legal means. In Oklahoma, obtaining a court order to quiet title is the appropriate method to resolve such defects, as it legally establishes the correct ownership and clears any issues from the public record. Recording a new deed or issuing an amended commitment does not address the underlying legal problem of a forged signature. A court order provides a formal resolution and is crucial for ensuring that the title is clear and insurable. Relevant rules. Oklahoma Statutes Title 12, Section 1501-1508 addresses the process and legal requirements for quieting title. Question 6. Title search and examination. During a title search, you encounter a boundary discrepancy between the legal description in the deed and the actual property boundaries, as shown on a survey. What is the best initial step to resolve this issue? A. Ignore the discrepancy and proceed with the title commitment. B. Notify the property owner to adjust the boundaries according to the survey. C. Consult with a surveyor to verify the boundaries and update the legal description if necessary. D. Issue the title insurance policy with an exception for boundary discrepancies. Answer: C. Consult with a surveyor to verify the boundaries and update the legal description if necessary. Explanation: a boundary discrepancy between the legal description and the actual boundaries must be resolved to ensure that the title insurance policy accurately reflects the property being insured. Consulting with a surveyor is essential to verify the correct boundaries and to determine whether the legal description needs to be updated. This step ensures that the title commitment and eventual policy reflect the true and accurate property lines. Ignoring the issue or proceeding with an exception does not resolve the fundamental discrepancy. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 discusses the importance of accurate legal descriptions and the resolution of discrepancies. Question 7. Title commitments and policies. Which of the following best describes the purpose of a title endorsement? A. To add new coverage to an existing title policy. B. To update the title commitment to reflect changes in the property value. C. To modify the terms of the original title policy to exclude certain risks. D. To transfer the title insurance policy to a new owner. Answer: A. To add new coverage to an existing title policy. Explanation: title endorsements are used to add specific coverages or modify the terms of an existing title insurance policy. They provide additional protection against risks not covered by the standard policy, such as zoning issues or changes in the property. Endorsements can address unique circumstances or provide coverage for particular risks related to the property. They do not update the policy to reflect property value changes, exclude certain risks, or transfer policies between owners. Relevant rules. Title insurance industry standards defines the use and purpose of endorsements in modifying title policies. Question 8. Risk management and claims. If a title insurance claim involves an undisclosed heir making a claim on the property, what is the title insurance company's primary responsibility? A. To deny the claim if it is outside the policy coverage. B. To provide legal representation to the property owner. C. To investigate the claim and determine the legitimacy of the heir's rights. D. To compensate the property owner for any financial loss without investigation. Answer: C. To investigate the claim and determine the legitimacy of the heir's rights. Explanation: when an undisclosed heir makes a claim on the property, the title insurance company's primary responsibility is to investigate the claim thoroughly to determine the legitimacy of the heir's rights. This involves examining historical records and legal documents to establish whether the heir has a valid claim under the policy's coverage. The insurance company must resolve the issue in accordance with the terms of the policy and may provide compensation or legal support if warranted. Relevant rules. Title insurance claims handling guidelines outlines the procedures for investigating and resolving claims related to undisclosed heirs. Question 9. Practical applications. Which document is essential for the final recording of the property transfer during the closing process? A. Title commitment. B. Deed. C. Mortgage application. D. Title insurance policy. Answer: B. Deed. Explanation: the deed is the essential document required for the final recording of the property transfer. It formally conveys ownership from the seller to the buyer and must be recorded in the public records to effectuate the transfer. While the title commitment and insurance policy are important for ensuring that the title is clear and the mortgage application is necessary for obtaining financing, the deed is the legal instrument that finalizes the transfer of property ownership. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 details the recording requirements and the role of the deed in property transfers. Question 10. Critical thinking abilities. A title examiner finds that a property is subject to an easement for a utility company that was not previously disclosed. What is the most appropriate action for the examiner? A. Issue the title insurance policy with an exception for the easement. B. Ignore the easement as it does not affect the property's value. C. Notify the buyer and seller of the easement and adjust the policy coverage accordingly. D. Immediately remove the easement from the property records. Answer. C. Notify the buyer and seller of the easement and adjust the policy coverage accordingly. Explanation. When an undisclosed easement is discovered, the most appropriate action is to notify both the buyer and seller and adjust the policy coverage to reflect the easement. This ensures that all parties are aware of the encumbrance and that the title insurance policy accurately reflects the property's condition. Issuing the policy with an exception or ignoring the easement does not adequately address the impact on the property. Removing the easement from the records is not feasible without legal procedures. Relevant rules. Title insurance policy guidelines emphasizes the need to disclose and adjust coverage for easements and other encumbrances. Question 11. Title search and examination. What is the significance of the chain of title in the title examination process? A. It determines the sequence of ownership transfers and helps identify potential title issues. B. It verifies the current owner's financial status and creditworthiness. C. It provides a list of all parties involved in the property's mortgage transactions. D. It records the physical dimensions and layout of the property. Answer A. It determines the sequence of ownership transfers and helps identify potential title issues. Explanation. The chain of title refers to the sequence of historical ownership transfers of a property. It is crucial for identifying potential issues or defects in the title, such as gaps in ownership or unresolved claims. By reviewing the chain of title, title examiners can ensure that each transfer of ownership is properly recorded and that there are no unresolved legal issues affecting the current owner's title. Verifying financial status, listing mortgage parties, and recording physical dimensions are unrelated to the concept of chain of title. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 covers the importance of the chain of title in title examination. Question 12. Title insurance fundamentals. What does a coverage limit title insurance policy refer to? A. The maximum amount the insurer will pay for any title defects. B. The minimum amount of coverage required by law for all title insurance policies. C. The amount of premium paid to secure the title insurance policy. D. The duration of time the title insurance policy remains effective. Answer A. The maximum amount the insurer will pay for any title defects. Explanation. The coverage limit title insurance policy refers to the maximum amount that the insurer will pay for losses due to title defects. This limit is typically based on the property's purchase price or the loan amount covered by the policy. It does not relate to the minimum required coverage, premium amounts, or policy duration. Relevant rules. Title insurance policy guidelines defines the scope and limits of coverage provided in title insurance policies. Question 13. Legal aspects of title insurance. Which federal regulation governs the disclosure of settlement costs and practices in real estate transactions, including title insurance? A. Fair Housing Act. B. Real Estate Settlement Procedures Act, RESPA. C. Truth in Lending Act. D. Home Ownership and Equity Protection Act. Answer B. Real Estate Settlement Procedures Act, RESPA. Explanation. The Real Estate Settlement Procedures Act, RESPA, regulates the disclosure of settlement costs and practices in real estate transactions, including those related to title insurance. I. SPA requires that borrowers receive a good faith estimate of settlement charges and a HUN-1 settlement statement detailing the actual costs. The other acts mentioned deal with different aspects of real estate and lending practices. Relevant rules. RESPA 12 U.S.C. SS 2060 et seq. governs disclosure requirements and settlement practices in real estate transactions. Question 14. Title commitments and policies. What is the role of Schedule A title commitment? A. Outlines the terms and conditions that need to be satisfied before issuing the title policy. B. It lists the legal description of the property and the parties to be insured. C. It details the exceptions and exclusions from the coverage provided by the title policy. D. It provides the amount of insurance coverage and premium costs. Answer: B. It lists the legal description of the property and the parties to be insured. Explanation: Schedule A. A title commitment provides critical information about the property, including its legal description, the name of the current owner, and the parties to be insured under the title policy. It does not outline the terms and conditions for policy issuance, that is, Schedule B, detail exceptions, also Schedule B, or provide coverage and premium details. Relevant rules. Title insurance commitment structure guidelines details the information included in each section of the title commitment. Question 15. Risk management and claims. In the event of a title defect discovered after closing, what is the typical first step a title insurance company should take? A. Deny the claim if it falls outside the coverage limits. B. Immediately file a lawsuit against the previous owner. C. Conduct an investigation to determine the nature and impact of the defect. D. Cancel the title insurance policy and issue a refund. Answer: C. Conduct an investigation to determine the nature and impact of the defect. Explanation: When a title defect is discovered after closing, the title insurance company's first step is to conduct a thorough investigation to understand the nature of the defect and its impact on the insured property. This investigation helps determine the appropriate response, which may include resolving the defect or compensating the insured party according to the policy terms. Simply denying the claim, filing a lawsuit, or cancelling the policy without investigation does not address the underlying issue effectively. Relevant rules. Title insurance claims handling procedures outlines the steps for investigating and resolving claims related to title defects. Question 16. Problem-solving skills. A property is being sold, and during the title search you find a recorded easement that restricts the use of a portion of the property. What should be your approach to addressing this issue in the title insurance policy? A. Exclude the easement from coverage and issue the policy as normal. B. Include the easement in the title insurance policy with a clear exception noted. C. Ignore the easement as it is not legally binding. D. Request that the easement be removed from the public records before proceeding. Answer: B. Include the easement in the title insurance policy with a clear exception noted. Explanation: When an easement is discovered, it should be included in the title insurance policy with a clear exception noted. This ensures that all parties are aware of the easement and its impact on the property. Excluding the easement or ignoring it does not provide proper coverage or disclosure. Removing the easement from public records is not feasible without legal procedures and does not resolve the issue for the title insurance policy. Relevant rules. Title insurance policy guidelines addresses how easements and other encumbrances should be handled in the policy. Question 17. Title insurance fundamentals. How does title insurance differ from property insurance in terms of coverage? A. Title insurance covers potential future property damage, while property insurance covers past ownership issues. B. Title insurance protects against historical title defects, while property insurance covers physical damage and loss. C. Title insurance is required by law for all property transactions, whereas property insurance is optional. D. Title insurance covers the value of improvements made to the property, while property insurance does not. Answer: B. Title insurance protects against historical title defects, while property insurance covers physical damage and loss. Explanation: Title insurance and property insurance serve different purposes. Title insurance protects against historical title defects and issues related to ownership that existed before the policy was issued, such as past liens or claims. In contrast, property insurance covers physical damage and loss to the property due to events like fire or theft. Title insurance is not required by law for all transactions, and it does not cover improvements to the property. Relevant rules. Title insurance industry standards defines the scope and purpose of title insurance versus property insurance. Question 18. Title search and examination. What is the purpose of conducting a property survey during the title examination process? A. To assess the market value of the property for insurance purposes. B. To verify the exact boundaries and identify any encroachments or boundary disputes. C. To review the property's historical ownership records. D. To provide a legal description of the property for title commitment. Answer: B. To verify the exact boundaries and identify any encroachments or boundary disputes. Explanation: a property survey is conducted to verify the exact boundaries of the property and to identify any encroachments or boundary disputes. It ensures that the property's physical dimensions match the legal description and that there are no issues with neighboring properties. It does not assess market value, review historical records, or provide a legal description, which are handled through other processes. Relevant rules. Survey standards and practices defines the role and purpose of property surveys in title examination. Question 19. Title commitments and policies. Which section of the title commitment would you review to find information about any outstanding liens or claims against the property? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer: B. Schedule B. Explanation: Schedule B of a title commitment lists any exceptions to the coverage, including outstanding liens or claims against the property. It outlines the specific issues that could affect the title and must be addressed before the title insurance policy can be issued. Schedule it contains information about the property and the insured parties, while the schedules are not standard in title commitments. Relevant rules. Title insurance commitment structure guidelines specifies the content and purpose of each schedule in a title commitment. Question 20. Legal aspects of title insurance. Under Oklahoma law, which of the following is true about the responsibility of title insurance companies regarding undisclosed defects? A. Title insurance companies are not responsible for defects that are not discovered during the initial title search. B. Title insurance companies must provide coverage for all defects, regardless of whether they were disclosed or not. C. Title insurance companies are only responsible for defects that were known and disclosed before issuing the policy. D. Title insurance companies must investigate and cover defects that arise after the policy issuance, even if they were not initially discovered. Answer: D. Title insurance companies must investigate and cover defects that arise after the policy issuance, even if they were not initially discovered. Explanation: under Oklahoma law, title insurance companies are required to investigate and address defects that arise after the issuance of the policy, even if they were not discovered during the initial title search. This means that the insurance provides protection against undisclosed defects that were not identified at the time of the title examination. Options A and C are incorrect because they do not fully address the insurer's responsibility for defects discovered after the policy issuance. Option B is also incorrect because title insurance does not cover all possible defects indiscriminately. The coverage is subject to the terms and conditions outlined in the policy. Relevant rules. Oklahoma Title Insurance Act, Oklahoma Statutes Title 36, Chapter 28. Outlines the responsibilities of title insurance companies and the scope of coverage provided by title insurance policies. Question 21. Title search and examination. In a title search, which of the following is an example of a common title defect that could be identified? A. A recent survey showing the exact boundaries of the property. B. A deed that fails to include the complete legal description of the property. C. A title insurance policy that lists the property's market value. D. A mortgage statement reflecting the current balance of the loan. Answer: B. A deed that fails to include the complete legal description of the property. Explanation: a common title defect is a deed that does not include a complete legal description of the property, which can lead to disputes over the property boundaries or ownership. A recent survey provides boundary information but is not a defect. A title insurance policy and mortgage statement pertain to different aspects of property transactions and do not directly reflect title defects. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 addresses issues related to incomplete or incorrect legal descriptions in property deeds. Question 22. Title commitments and policies. What is typically included in Schedule B of a title commitment? A. The legal description of the property and the names of the insured parties. B. The conditions that must be met before the title insurance policy is issued. C. The exceptions and exclusions to the title policy coverage. D. The total amount of coverage and premium costs for the policy. Answer: C. The exceptions and exclusions to the title policy coverage. Explanation: Schedule B of a title commitment lists the exceptions and exclusions to the coverage provided by the title insurance policy. This schedule details any issues or encumbrances that may affect the property, such as existing liens or easements. Schedule contains the property description and insured parties, while the conditions for policy issuance and coverage amounts are handled in other sections. Relevant rules. Title insurance commitment structure guidelines details the information included in Schedule B of the title commitment. Question 23. Risk management and claims. What is the primary purpose of a title insurance company's investigation after a claim is filed? A. To determine if the claim falls within the coverage limits. B. To verify the accuracy of the title search conducted before issuing the policy. C. To assess the validity and impact of the title defect reported in the claim. D. To cancel the title insurance policy and issue a refund to the insured. Answer: C. To assess the validity and impact of the title defect reported in the claim. Explanation: the primary purpose of a title insurance company's investigation after a claim is filed is to assess the validity and impact of the reported title defect. This involves determining whether the defect is covered by the policy and how it affects the insured party. Determining coverage limits, verifying the title search, and cancelling the policy are not the primary focus of the investigation. Relevant rules. Title insurance claims handling procedures describes the process for investigating and resolving title insurance claims. Question 24. Title insurance fundamentals. Which of the following best describes the owner's policy in title insurance? A. A policy that protects the lender's interest in the property against title defects. B. A policy that insures the property against future physical damage or loss. C. A policy that provides coverage to the property owner for defects in the title that existed before the purchase. D. A policy that guarantees the accuracy of the property's market value. Answer: C. A policy that provides coverage to the property owner for defects in the title that existed before the purchase. Explanation: an owner's policy in title insurance provides coverage to the property owner for defects in the title that existed before the purchase of the property. It protects the owner's interest against issues such as past liens or claims. It does not cover the lender's interest, physical damage, or guarantee market value. Relevant rules. Title insurance policy guidelines defines the scope and purpose of the owner's policy. Question 25. Legal aspects of title insurance. According to Oklahoma law, which document is required to be recorded to establish a valid easement on a property? A. A quitclaim deed. B. A mortgage statement. C. A survey map. D. An easement agreement. Answer: D. An easement agreement. Explanation: to establish a valid easement on a property, an easement agreement must be recorded. This document outlines the rights and restrictions associated with the easement. A quitclaim deed is used for transferring interest in property, a mortgage statement pertains to loan balances, and a survey map does not establish legal rights. Relevant rules. Oklahoma Statutes Title 16, Chapter 50 addresses the recording and validity of easements. Question 26. Problem-solving skills. If a title examiner finds an unreleased mortgage lien during a title search, what should be the first action taken? A. Ignore the lien if it was from a previous owner. B. Proceed with issuing the title insurance policy without addressing the lien. C. Contact the lender to obtain a release of the lien before proceeding. D. Deny the title insurance policy due to the presence of the lien. Answer: C. Contact the lender to obtain a release of the lien before proceeding. Explanation: the first action should be to contact the lender to obtain a release of the unreleased mortgage lien. This ensures that the lien is removed from the property's title, which is necessary for clear title and effective insurance coverage. Ignoring the lien, proceeding without addressing it, or denying the policy are not appropriate steps. Relevant rules. Title insurance examination guidelines details the process for addressing outstanding liens. Question 27. Critical thinking abilities. How should a title insurance company handle a situation where a newly discovered defect affects the title but was not mentioned in the initial policy? A. Reject the claim and maintain the original policy terms. B. Issue a new policy excluding coverage for the new defect. C. Amend the existing policy to include coverage for the new defect. D. Provide compensation only if the defect was due to an error by the insurer. Answer: C. Amend the existing policy to include coverage for the new defect. Explanation: if a newly discovered defect affects the title and was not mentioned in the initial policy, the appropriate action is to amend the existing policy to include coverage for the new defect. This ensures that the coverage is up to date and addresses all potential issues affecting the title. Rejecting the claim, issuing a new policy, or limiting compensation do not address the need to amend the original coverage. Relevant rules. Title insurance policy amendments describes how policies can be updated to reflect new defects. Question 28. Title search and examination. Which of the following is a key factor in identifying boundary discrepancies during a title examination? A. Reviewing the property's market appraisal report. B. Examining the recorded deeds and property surveys. C. Checking the property's historical sale prices. D. Analyzing the current mortgage statements. Answer: B. Examining the recorded deeds and property surveys. Explanation: boundary discrepancies are identified by examining recorded deeds and property surveys. These documents provide information on the legal description and physical layout of the property, which helps in detecting any inconsistencies or disputes. Market appraisals and mortgage statements do not directly address boundary issues. Relevant rules. Property survey and title examination guidelines outlines the methods for identifying boundary discrepancies. Question 29. Title commitments and policies. In which section of a title commitment would you find information about exceptions to the title policy, such as prior liens or encumbrances? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer: B. Schedule B. Explanation: Schedule B of a title commitment provides information about exceptions to the title policy, including prior liens, encumbrances, or other issues that could affect the title. This schedule details what is excluded from the coverage and what needs to be resolved before issuing the final policy. Relevant rules. Title insurance commitment structure guidelines details the content and purpose of Schedule B. Question 30. Risk management and claims. When handling a title insurance claim, what is the title company's primary responsibility? A. To determine if the claim amount exceeds the policy's coverage limits. B. To investigate the claim thoroughly and determine its validity. C. To deny all claims that involve errors in public records. D. To provide immediate compensation without investigation. Answer: B. To investigate the claim thoroughly and determine its validity. Explanation: the primary responsibility of a title insurance company when handling a claim is to investigate the claim thoroughly to determine its validity. This includes evaluating the nature of the defect and how it affects the title. Simply assessing coverage limits, denying claims, or providing immediate compensation without investigation are not appropriate practices. Relevant rules. Title insurance claims handling procedures describes the process for investigating and resolving claims.